With Shiba Inu, riches were made while you slept. You heard that right. Rich people with a B. They can't be stopped and are making progress towards their goal of becoming trillionaires. I know it's tough to believe. I mean, how is that even possible? We all know that Elon Musk is not a trillionaire. But first, listen to me. You'll get my point by the end of this movie. Nota bene. There is big news out there. The Shiba Inu coin burning tracker saw a big rise, or tsunami as the Shiba army calls it. As the Shibarium development team said, more than 8 billion Shiba tokens worth more than $76,000 were burned during the deal time. This move was made soon after Shibarium saw a huge rise in the number of deals that happened every day. Almost 8 million trades happened yesterday alone, which brought in a lot of trading fees in Bone token. Because Bone is a gas token, or the token you use to pay the fee when you do business on Shibarium, if you remember. In the most recent issue of Shiba magazine, it was written that the 50,000 collected bones were traded for the main token, resulting in a large burn deal. The increased burning is happening at the same time that the SRC20 token is being minted. The Shiba Inu group is waiting for a long-term solution to keep the 9 coin burning at the same rate. This station will soon have more videos with full explanations about how to mint SRC20 tokens, so make sure to subscribe. If you watch my last video, you should know that Shibarium developers recently wrote an official blog post about a better way to burn Shiba Inu that will go live in January 2024. There are both manual and automatic modes on this dual Shiba Inu burning device. In manual mode, the deployer's wallet is in charge of the token burning process. This part has not yet been synchronized with validators and node operators on the blockchain. Lots of hard words, but I'll talk about them in one of my next videos for sure. The automatic mode, on the other hand, does Shiba burns according to rules that have already been set. Trading fees add to Shiba burns, so making sure that crypto fans are treated fairly and efficiently is important. The Shiba Inu burning process is expected to be an important part of Shibarium's economy. These huge changes to the Shiba Inu environment make me think of one of the very wealthy crypto whales who made a lot of money on Shiba Inu. One user on the social media site X shared news about an unknown cryptocurrency trader who made a huge $1.06 billion in a year by dealing Ethereum and Shiba Inu. Here's a quick example to help you understand what $1.06 billion means. It would take you more than 50 years to get to $1.06 billion if you made $1 per second, which is $3,600 an hour. This timeline draws attention to how big the number is when put in terms of time, emphasizing the long period of time it represents. The trader's ability to find coins with much lower market caps was praised in the post. As a result, his crypto portfolio grew by an amazing 3 million%. Trading low-cap cryptocurrencies may seem like a great way to get a 3 million% return, but it's important to know that this strategy comes with a lot of risks. It can be very risky and changeable to trade in low-cap coins. Although some people may make a lot of money, a lot of other people will lose all the money they spent. Low-cap coins usually have smaller market caps, which means their prices can change quickly based on how the market feels. There are problems with liquidity and not enough regulatory control. When people want great returns, they often are willing to take on more risk. People who are thinking about using these kinds of trading strategies need to do a lot of study, keep up with market trends, and be aware of the risks. It wasn't silly for this whale to depend on just one very risky strategy. He also bought and sold big digital coins like Ethereum and Shiba Inu. At the moment, the trader has most of his money in Ethereum, which is worth more than $400 million, and Shiba Inu, which are worth almost $380 million. All of that is happening for a reason. Soon there will be crypto ETFs. If you've watched my other videos, you should already know that exchange-traded funds, or ETFs, for cryptocurrencies could help change the crypto market in big ways. If crypto ETF is allowed, it could bring a lot of institutional and retail money into the cryptocurrency market. This is because it makes it easier for big institutional investors to invest in crypto in a regulated way, which could drive up its price. You should know that these big investors are businesses that make investments on other people's behalf and usually handle large amounts of money. Pension funds, mutual funds, insurance companies, hedge funds, banks, and other financial institutions are some of these groups. In other words, big names. There are a lot of online conversations about the Bitcoin ETF, but when people only talk about Bitcoin, they miss the whole point. If accepted, crypto ETFs will be able to hold more than just Bitcoin. There is more to come than just the Bitcoin ETF. The worry that has spread through the crypto world is as follows. What if these big fish or institutional buyers don't care about crypto? That makes sense then. They don't need to wait for an ETF to be accepted before investing in cryptocurrency. Instead, they can use Coinbase or Binance right away. But this is where they are totally wrong. When institutional investors try to buy cryptocurrencies directly through sites like Binance or Coinbase, they run into problems. Even more so before crypto exchange-traded funds ETFs were approved. One problem is that there is regulatory uncertainty because cryptocurrencies work in a regulatory gray area where the rules are not clear. Because of the way digital assets work and the fact that there isn't a clear regulatory system, institutional investors may have trouble with compliance and due diligence. There are also custody issues because coins are digital, which means there are security risks. It might be hard for institutional investors to keep private keys safe and protect themselves from cyber threats, because they often have strict custody standards. Another thing that keeps big investors away from cryptocurrencies is that they are very volatile. These investors may be wary of the risks involved. This worry is made worse by the fact that there isn't much past data and the crypto market has only been around for a short time. It's possible that traditional banks don't have the right facilities to work with cryptocurrency exchanges. Building the infrastructure needed for trading, settlement, and reporting can cost banks a lot of money. Institutional investors also usually use diversified and risk-managed investment strategies, which might not work with the few investment choices in the crypto market before ETFs were approved. For these buyers, investing directly in single cryptocurrencies might not be a good idea because of the risk. Now that we know this rumor isn't true, here's something interesting. As soon as Bitcoin ETF is accepted, ETF companies will be able to focus on other cryptocurrencies like Shiba Inu. Once the first crypto ETF is approved, they will know exactly what needs to be done to get any other crypto ETF approved as well. This means that crypto ETFs may be approved very quickly. Even though the Bitcoin ETF hasn't been accepted yet, it was just revealed that BlackRock, the biggest asset manager in the world, got $100,000 from an unknown investor to start its spot Bitcoin ETF. That's really cool. Even though it hasn't been approved yet, people are already putting money into Bitcoin ETF. It means there is a lot of interest. This news totally destroys the silly question from crypto newbies that we just talked about. You may remember that the question, what if these big investors or institutional investors aren't interested in crypto? Do you now feel like the market will go up? Leave a comment below. When we talk about rich people, this is a very interesting fact. The numbers given show how the billionaires under 50 years old are spread out across different businesses. Technology and banks and finance are, without a doubt, the two biggest industries. A lot of billionaires work in technology, which shows that blockchain technology and cryptocurrencies are being used more and more in tech-related businesses. There are a lot of people in this field who know that decentralized technologies can change industries. This could mean putting money into blockchain startups,